What up, investors? It's Friday and the week has closed, and this account has been an absolute money maker, just a money printing machine over here, setting another all-time record here. And I want to talk about the longevity and possibility of how long this thing is going to last before we turn. Obviously, I've been wrong about this week as well, but there's the value of not trusting my judgment, right? You don't want to be doing things on a whim. You want to make sure you have some kind of process or something that kind of grounds you in moments of where you feel like you should be doing one thing, but actually, if you did that one thing, then you would be missing out on a lot of returns. And that's the kind of stuff that causes you to lose to the markets. And I really don't like losing to the markets. So anyway, I want to show you around the accounts, and then I want to talk about what was I going to talk about? Oh yeah, some of the kind of like the mental challenges associated with sticking with it and not doing things on a whim. So here's the accounts. How did that work? Was that okay? So I'm sitting at 212,000. It's all-time record high. Like I said, an absolute money-making machine. Beating the markets today. I actually did not beat the NASDAQ, I don't think, but I beat the S&P 500. Today's gains were 1.88%. So I'm going to run you through all of the positions here. You'll see the options positions first, and then I'm going to scroll down into the equity positions. Then we'll do a valuation comparison to the S&P 500. And then I'm going to take you through the account, show you the leverage and everything else. So you can pause the video at any moment to try to figure this out. I've actually started layering kind of bearish option spreads here just because I feel like we're entering parabolic territory here on the S&P 500, and I want to be able to not let this downturn go to waste. So you see a Smith & Wesson call options credit spread here that is going to return me about like $300 or something like that. It's not insignificant in the grand scheme of things. Every dollar really counts because it compounds. So I could end up blowing through this and losing all that money, but if Smith & Wesson actually stays over $15 by 8/19, then I'm going to be kind of even money because, I will have collected some premium from other option plays. So anyways, if you want to find out the exact positions, you can pause the video at any time to try to figure out all the information here. I'm going to scroll through it real quick in the interest of time and not reviewing every single position in such great detail when you've probably watched the previous video. Half of you are returning viewers, so that's cool. Last time I mentioned that about 51.4% of you watched the video all the way through, so I really appreciate that. Means that maybe a couple of things that I'm saying are interesting, so that's cool. So everything was up today, major green all the way across the screen. I even got lucky on my PayPal leaps here, where I sold some call options against the leaps, and they actually expired worthless. It was only like $16, but hey, like I said, every dollar counts. I'm not about to, I'm not too big for $16. I'll take it. Okay, so those are all the positions. Let's go to the account tab first, and then we'll do the comparison relative performance video. So my leverage now is at an all-time low again this year, sitting at 12.3 times 2. That's 24.6% leverage, which is very low. I want to actually have some cash in here, so if the market keeps going up, I'm actually going to have some cash sitting in the account that I can use as as a collateral instead of trying to borrow collateral. So that would be cool. We'll see what happens. Hopefully I get to do that, but I have a feeling that that's not going to last forever, and I'll talk about that in a second, as well as the importance of not trusting your feelings. So as far as the concentration of the accounts, only a few positions to review here. This is the account based on total return. It's Apple, Main Street, and then Realty Income based on equity. Apple is by far the biggest position in the account, over 50% at the moment, sitting at $123,768. It's Main Street Capital, second largest, 37, Paramount at 31. I have options positions against all these, so they're not that constant. It's not that clear cut. So 1 week performance, 3.25%. 1 month performance, 19.44. Absolute monster month, by the way. Absolute monster month. When you look at the S&P 500, you'll see that 3-month performance 34.81, blistering hot rally, especially for me. 1-year performance 25%. So we got 3.25, 20, 35, 25. Let's see what the S&P 500 has to say here. The SPY. So 1 week performance. First, let's check out the day. I think I beat it by a tiny bit. 1 week is 2.87. I was 3.5, so it's good. 1 month is 13.14. 3 months is 7.67. So winning majorly here. Not so much in the month, but on 3 months it's just absolute like carnage. And 1 year I'm winning by about 29%. So there you go. S&P has been negative year over year, and now I'm positive like 25%. That's a huge difference. So I'm really happy about the outperformance this year. Hopefully I get to outperform the markets for the rest of the year, because last year was the first one I failed in 4 years to outperform the markets, and it really hit me sideways because I thought I knew what I was doing. And of course the markets are really, really tough opponents, and they'll put you right back in your place. So I went really heavy into China last year, and that was a mistake. Obviously I caught a really significant the downturn. I caught a huge significant like portion of that downturn, and it completely destroyed my account. I was up winning over the markets by like 6 or 7%, and then I underperformed by I don't know how much, like 10 or 15%. It was really bad. I was still positive, still made money on the year, but I lost to the market, and that was really disappointing. So hopefully this year I get to beat them. Now, okay, let's talk about these upturns. Okay, let's look at the S&P 500. Look at this upturn here from negative 7.7 to up 7.67. So that's like 14, 15, I don't know, 18% move on the upside since June, what is it, 17th? Since June 17th, we've had like a 16, 17% move up. This is what it looks like on the 1 year chart. Now, these kind of like, this is almost getting exponential. So we could have another 1 or 2 days, but this is really close to peaking out. Like, exponential charts don't last for very long. So maybe we'll have another week, maybe we don't. But my personal bet is that, the next on Tuesday is probably going to peak out, Monday or Tuesday, probably Monday morning, and then start a downturn all the way through the week. I could be wrong. Obviously, this is just my opinion, and that is the importance of like not putting your opinions into actions. Like, yeah, that was my opinion, but it's not a judgment call on what I'm doing. So there's a big difference. My opinion is the market's going to turn down, but so it was my opinion that they're going to turn down in the previous week, and the week before that. I even expressed that on this channel. And if I had acted according to that, if I had sold a bunch of positions, turned bearish, bought a bunch of SH, or shorted the S&P 500, or bought puts or something like that, I would be in a much different position right now. I would actually be down over the last week. I'd be losing money rather than making money, which is, and those are just whims, right? They're feelings. And if I'm having this feeling, that means that every single other investor is having this feeling, right? And we're being taken advantage of by the market makers because we're acting on feelings, on our opinions. So there's a big difference between judgment and opinion. Like, the judgment is something that I did with the previous video. Go watch it. I shared a trade. That's a judgment call. All right. I looked at the numbers, looked at the fundamentals, look at the price, look at the probabilities, and I placed some trades. That's a judgment. But market's going to turn down. That's an opinion. It has no basis in any kind of judgment, all right? Like, if you're a technician, like, I give you props, okay? Like, let's say you're a technician and you do this for a living, and like you know how to read the tea leaves or whatever, or know how to draw lines, then you can you can trade on that successfully, then more power to you. That's not what I'm doing. I can't do that. I'm not good at it. I studied it a bunch. I know the basics, but the reality is that I'm a 50% trader, no better than or worse than your average Joe. It's just gambling for me at that point. So I will take, technicals into consideration, but that's not how I'm going to make money in this market, right? I make money of the fact that I'm ignorant. So I'm monetizing my ignorance about market predictions, and I'm making judgment based on probabilities. Like, that's the best I can do. So some people will take that and they'll say, okay, yeah, but after this and this many weeks, the probability of there's another bull week is very slim. And fine, that's true. But the thing is, like, if I miss this next week, if I layer on a bunch of bearish positions and I'm net bearish, first of all, I'm breaking one of my rules, which is to be at least 55% net positive at all times. I'll break one of my rules. Net positive means net bullish, sorry. And on top of that, I will have missed, probably one of the biggest weeks of the year, because in exponential runs, the last part of it, of the exponential run, is the biggest one, and sometimes dwarfs the other weeks. It's like twice it's 50% of the move is in that last week. So let's say this parabolic move continues, and I miss 50% gain, of this parabolic move. I mean, that's a huge loss that's going to carry throughout the rest of the year. It was going to affect the percentage gain by like 10 percentage points. So instead of, let's say, having a 20% year, I'm going to have a 10% year just because I made this move based on my opinion. So I got to keep my opinion out of this. So that's my point here. But at the same time, like I said, look, this is probability. This is kind of like a pet short. It's not much. Let's take a look at it. So I made a credit call spread because I think $15 per share on this on Smith & Wesson's getting a little bit rich medium term. So just kind of like a hedge. I decided that I could afford this, and I'm going to try to slim this 29 cent difference down to zero. So basically betting that Smith & Wesson is going to expire. It's going to be below $15 on August 19th. And in the process, I'll be collecting $290. And I think I'm risking like, I don't know, like a couple grand or something. Maybe a grand, I don't know. So that's what I'm risking in the process. So I could lose it all. But the thing is, like, because of my position, let's see. Because of my position here, I'm expecting to gain by 9/16 over $1,000 just from theta decay, right? Just from the premium decaying down to zero. So I'm going to make that money up if I lose, and that's fine. But at the same time, I don't want to, like, completely check out and not make any money on the downturn at all. So I have this kind of like pet call credit spread. I know that what I'm saying kind of seems contradicting. And yeah, I could blow out on this credit spread, but I'm like 50%. But what happens is it's a hedge, right? So even though I'm a 50% trader, no better or no worse than your average Joe off the street, or just a random number generator or a monkey or whatever you want to call it, 50% trader. The thing is, like, I'm putting that 50% out there to reduce the amount of long exposure that I have. Okay, so I can play around with that. I can have that hedge, and all I'm doing is actually reducing risk. So I'm just making my account less risky. That's all. So other things I could have done is things I've already done. Like, I sold out of my Goldman Sachs position, for example. I could I sold some call options against some of my Apple position at the $172.5 level, and they didn't hit, so they expired worthless. That's fine. I would have sold, I actually sold 10 Apple shares, for example, So I've done moves. I've sold call options at the $45 level for my Main Street. So I've actually reducing the risk in the account quite substantially. But I'm still over 100% long. I'm like, I'd say 105% long at the moment. So or maybe it's around 100% or 95, somewhere around there. I haven't done any math to try to figure out. It's very difficult to figure that out exactly how much it is, but I'm somewhere around there, somewhere between 95 and 105% long at the moment. So if the market goes up, I will benefit, no doubt about it, right? You can't put a percentage on it either, because like I might be 105% long up until a certain point and then be 95% long, right? And then 70% long if it goes to a certain level without me touching anything in the account. So you can't really I'm just eyeballing it. Okay, it's not as simple as that. It's much more complicated. So anyway, if you want to look at that trade that I'm going to be continuing to put on Monday, check out the previous video. And also make sure you use your judgment and not your opinion and feelings. Okay, that's my advice to you. If you're anything like me, perhaps your opinion, feeling, and intuition is money, and you can monetize that. That's on you. That's fine. That's your process. I'm just telling you, for me personally, it never works. I'm losing money like crazy. So I just want to share that. And also, I want to journal this and record the fact that I'm at all-time high today, and also record my mental state. I recommend journaling for you guys too. I do it through video. You could do it through pen and paper, type it up, audio, record it into your phone. Like, it doesn't matter, but I think journal is really, really helpful to try to keep yourself honest to yourself, and record your what your thoughts are, what your mental state is, and what kind of moves you're contemplating during a specific time in the market cycles. All right, now with that, have a great weekend. I'm probably gonna make a company review video this over the weekend. I have some suggestions still. If you want me to review a company, I do these shallow dives now whenever I have time over the weekends. Comment that below in the comment section, and I will see that I get to it. Hopefully it's not an ADR. Try to choose a company that's listed somewhere in the Americas, because it's much easier to review all their numbers and make sure that we're getting some accurate data, right? Okay, with that said, hopefully y'all are staying mentally strong and are making gains that are even bigger than mine. Till next time, peace out.